Good morning, everyone. How's everybody doing? Had a good weekend? Good to see you all. Well, spring is here, and the arrival of spring marks the new contract. So, I was actually um, kind of organized this weekend, and I did the rollover. Usually, what I do is I'm lazy, and I do the rollover on Monday morning. But I'm starting off this spring. I'm being organized. We're doing the rollover. Where are you, Flex? Where is it snowing? It sounds like you're Canadian. Hey, aloha. I know it's not snowing in Hawaii, Kai. Cisco. How you doing? Missouri. I didn't even know it snowed in Missouri. Snow in March is a very Canadian thing. Every March, I remember I used to get my bike out, my motorcycle out, get it all ready, take it out for like a weekend ride. Monday morning it snowed. uh, Alrighty. Well, the new contract has traded 90,000 contracts. The old one is at 113. That volume will flip during the day. Probably mid-morning, you'll see that the new contract will surpass the old one. Yeah, TradeMaker, we opened on a gap down. So let's talk about that. Okay? So it's the new contract. And what does everybody really want to do before, right? The rollover. They want to cover as much as they can. So let me tell you guys something, and this you'll never hear this in any other trading room. Okay. You want to know how do I say this politely? There's something called massaging the pre-open. Okay? So if you were short, right? If you were short a little bit of size, what the pre-opens at 6 p.m. New York time, right? The opens at 6. So I think what is it, 5 p.m. they start letting orders come in the book. Now, as a retail trader, you can't go and put orders in that 5 p.m. thing, right? You, they get rejected. So what you do, the large traders, what they do is they start putting big sell orders in. Boom, 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 boom. The market will gap down and you can cover. Do you guys understand that? If you put in, that's why all the people who look at a DOM and an order book, that's why they always get suckered, because what you put in an order book is not an accurate representation of the transactions that you want to do. Because if you actually showed your hand, you'd be like the biggest idiot. You never show your hand. You never tell people that you're going to be a buyer when you're a buyer. You never tell people that you're a seller when you're going to be a seller because they'll take advantage of you, right? Because that's how business works. So what you do is you put in a lot of big orders in the open to push price down. It gaps down, you cover, and then boom, right back up. Okay, so that's why we opened on a gap and filled the gap pretty quickly. So we opened, looked underneath yesterday, Friday's low, came back up, and we have a short covering profile. Now it's overnight inventory is very, very long. It hit those single prints from Friday to the tick. Look at the overnight high. So if you were long, say you were long 66.96, and you know that there's a seller in the 35s, you can get a sell 32, 33, right? That's what you do if you're smart. Now it's all the way back down to 13. Let's see if it can take out that 67.05 area, and that's what we'll be looking for, right? So it'll be back and forth today. Now remember, the volume is split between two contracts. So it's going, you're going to have less oomph. You get it? That's why you have less follow through. But it's actually not bad. There's pretty decent follow through. Overnight point of control is up here at 67.12. Right, there's those single prints. This is, you might as well just go and put this in. Area of supply, which equals resistance. Okay? And now we are correcting inventory back down. Nice little trade would be if you were shorting this area here, your stop would be here, you're short, and then you'd be cover, 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 down to the point of control. That's a nice counter inventory trade. Now let's see where are we at. VWAP's at 67.08. You can see we've been in distribution all night. Beautiful distribution, right? So let's see if we come back down. First test is going to be VWAP. Let's see if we do a look below and fail of 67.11. And remember, if you're trading this morning on the new contract, what's the main thing that you want to be doing? Paying attention. I like to watch a contract trade. You get to know it, right? You understand where the order flow is a little bit. It's like trading a brand new stock or something like that. So, does everybody understand what I'm talking about? We got sellers at 16. Let's see if we do a look below and fail of 11 3/4. I did these levels yesterday when I did the update. Hey Dave, how you doing? I think we've got good news from our friend. So right now I'm just watching that movement back and forth at 11 3/4. I'd really like it to kind of go maybe down to 10 and then come back up. Oh, happy birthday. Here we go. Do you see the bottom of these candles, folks, is at the exact same level? 1, 2, 3. If that holds, right? If you go long, say you're going long here, you know, say you're going long at 12. Well, your stop is going to be just underneath these candles. Because if it really takes out the bottom of these candles here, then there's no reason being long, right? So I'm long 12. I'll go sell one, see if I can sell one at 13 and a half. I'm long 12 and a quarter. I'm out one at 13 and a half, and I'm out one at 14. That's not bad, right? Just a test trade, right? To see, and that's exactly, do you see why I took that trade? Bid, bid, bid. Do you see the bid? No problem, Stealth. Have a good one. Got to keep those doctors busy. Does everybody understand why I took that trade? Hola, Juan. ¿Qué pasa? Does everybody understand the business reason for the trade? Does everybody understand the risk for the trade? It's just a test trade. So what I'm doing, right, as an old trader, I'm testing the bid, right? We're testing the bid. It was hilarious. I went to this St. Patrick's Day party in the building Friday night, and there's a new resident. He's like, "Oh, I used to be a trader," and I'm like, "Ah, oh, same here." We start talking, and he worked for J.P. Morgan, and he did derivatives and all sorts of stuff. And back in the day, and I'm like, "Yeah, I had my heart attack at 44," and he's like, "I had my stroke at 44." It was hilarious. Like, oh, okay, we're brothers. Oh, it was hilarious. What am I trading? This is the ES Flex. Do you see how it says F.US.EPM26? You there, Flex? You okay? I trade the same thing every day. I always trade the ES. I don't trade anything else. So if you see anything else on your screen, it means you're looking at the wrong screen. I rolled over the contract, brother. Do you know what contract rollover is? I'm on the new contract, my friend. If you're just joining us, I kind of went through a whole song and dance about contract rollover. So you're probably trading 66.65. We're trading 67.15, right? You're probably on the old contract. We're on the new one. It's okay. It's Monday morning, man. Don't worry about it. Hey, at least you're not looking at Microsoft. Yeah, we're trading the new contract. So we got sellers at 15 and a quarter. Yeah, we're on the new contract. It's okay, man. Don't worry. It's Monday morning. If you look In the JJ replays, I put the how to roll over the contract. I put in a weekend update video. So if you need help with that, it's all there. Cost basis is 97.75 to 11.75 right there. Double it up to 39.75. So say you built a little long position between 11 and 15. Well, you're going to be a seller in the 20s. Yeah, no problem, Flex, no problem. Right. Just ease into your morning. Roll over the contract, relax, make sure your levels are cool, redo your balance levels. Yes, Mohammed, inventory is long. The close from Friday is here. All the inventory is above the close. It is long. It has adjusted. It found bids here. See, at 67.11. So, yeah. New contract. Spring is here. Hey, Moran, how are you? Did you have a nice holiday? That's good. Let's see if there's a seller up here at 18.25. Right, so if you were long 13, 14, I'd be on the offer. I'd definitely be on the offer. Life is good on the offer. You know, if you're long, you always want to be on the offer. You always want to be making sales. Right? That's the blood of business is making sales, right? That's how you make money. Buy inventory, sell inventory. That's why it's called a market. Broke through. So you should be pretty much out of your position by now. Right? If you're a small trader and you bought 3 contracts, maybe at an average of 14, and you sell 3 contracts between 18 and 20, that's not bad money. You guys get what you get what I'm saying? It's a nice way to make a living, right? Even if you average 3 points, right? It's $150 on 3 contracts. That's a $450 trade. And all you got to do is that trade once a day to make 9 grand a month. Now, how many retail traders are making $9,000 a month consistently? Probably not very many. I'd say less than 1 to 3%. There is, right? Because everybody's looking for that 20, 30 point trade. And there's nothing wrong with that. But if you don't have the skill to do it, you're not going to make the money, right? So why not take the 9 grand a month and try to, instead of trying for like 30 grand a month and blowing yourself to smithereens? And then the stress of that. Do you see how simple that is? That trade is the simplest trade because the basis is that we ran out of supply under 11. So you buy 11, 12, 13, 14, sell 16, 17, 18, 19. Do you guys understand? Does people on YouTube, do you guys get that? Do you see how low stress that is? Would 9 grand a month make your life better or worse? Sure as hell beats blowing up accounts. Right? And why wouldn't you sell it? Because everybody else is. See? A simple transaction that makes good business sense. That's just good business. Yeah, your risk was like, if you're long 13, 14, your risk is 12 at the worst. If you want to be a big shooter, maybe 11. Those are the trades you want, my friends. Those are the trades you want. You want trades where you're not killing yourself to make money. You know? Seriously. And you're in and out. All you got to do, you have to be a little, how do I say, a little quick. Which means you got a little, you just got to be on top of it a little bit, right? Don't fall asleep at the switch, right? So how do you transact that trade? Well, when it does the look below and fail, you go and you buy some here, 12, probably 13, right? You put your stop here, sell a little here, sell a little here, sell a little here, right? And your stop is right there. So what is the sequence of events? First is put in your buy order and your stop. As soon as that buy order gets hit and executed, put your sell orders out. If those sell orders don't get executed, flatten the trade. That's all you got to do. Now, it sounds easy. It takes some time and it takes execution and it takes skill. But, you just got to keep doing it over and over and over again. Now, do we take it the second time that it comes down? I don't know. The second time it comes down, you're going to have more trapped longs here because you've just trapped a bunch of people long over 16. That's pretty much it. Does everybody understand? That was sort of a picture perfect look below and fail. And you can see the electronic trading and the algorithms make it so nice because your risk is so limited. You know, your risk is very tight, right? The backdrop for that trade is this space here between VWAP and 6711. There are unfilled buy orders here. So the sellers stopped selling once they saw those and they raised price. That's why we went long with the size. Then the sellers re-engaged here, so price moved back down, right? So this is the front end of the move, the back end of the move. Cool? Okay, it's Monday. Everybody's kind of still sleepy. Yesterday they increased margins before the session, and then to about 2 hours into it, they said margins are back to normal. So not bad. I guess they were expecting. Who knows what they were expecting? That's pretty much it. You guys are really quiet. Let's see what happens when London opens here. That's okay, Dave. It'll be a short session this morning. I'll shut it. I'll shut it down a little early. No use torturing you folks. Yeah, let's see if it takes out. We got a seller right here at 21. If we take that 21 out, you're looking for 23, and then there'll be sellers up here at, where is it, 24 and change. Yeah. Yep, seller right there. Right where we saw where we expected the seller to be, they stepped in. Pretty simple, huh? So if you all you got to do is just mark off where the sellers are. Hey, Sean, any indicators to be useful? Volume, tick, advanced decline, all useless as tits on a bull, my friend. Excuse my language. I've tried all that stuff. Volume indicators, tick, advanced decline. Well, first of all, Sean, here's the thing. Tick and advanced decline is not working because the New York Stock Exchange is closed. So at 3 in the morning, those things aren't on. Breath, New York Stock Exchange, breath, it's all closed. I'm telling you, I went through the whole rabbit hole. Advanced decline, volume up, volume down, breath. Um, the old traders were using trend. All that stuff was great before algorithms, right? Algorithms make that stuff all completely useless. I'll tell you something. If you can focus, now this is where people have the hardest trouble, okay? The hard part is actually being able to focus on something for more than 30 seconds. Did you see how I told you where the sellers would be here, my friend? Right? I said there are going to be sellers here. And if you were long, say if you were long 16, 17, and you got here to 21 and change, and if you were long 16 and you sold 20, you made 4 points, which at $50 a contract is $200 on 3 contracts. That's a $600 trade without any indicators at all. All you got to know is that there are going to be sellers, so when you're long, you go and you sell before they do. You see how simple it is. This is how people have been trading for centuries. Because screen-based trading, right? It's okay to get out early because you're getting used to the price action. You're getting used to this method of trading. You're getting comfortable. It's like when you ride a motorcycle, first you want to get it around the block without crashing before you start doing wheelies and trying to do jumps and stuff, right? So you just got to you got to get comfortable with the price action. You got to get comfortable with the trade. Not a big deal. That'll happen in time. Repetition is how this becomes a job that pays. It's repetition, right? But do you notice that I've got VWAP there, right? All I know is that they're buying it before VWAP, so there's bids. That's all I need. I don't need anything else, right? And I've got my levels of cost basis because the market went and sold above cost basis, came back to where we paid for it, stopped selling at 11 and a quarter, 3/4, and then went right back up. So you go long. It's so simple. No indicators needed, nothing. Because nobody had indicators before 1995, right? Windows 95 was when screen-based trading started becoming, that was the dawn of screen-based trading. Before that, we had something called Windows 3.1, which to run a chart, you needed a frickin' Cray supercomputer to run a chart. So nobody had access to fast charting like this. So how did people trade when they had price every 15 minutes on a ticker? They would have a level that they watch, and when the market went underneath that level and came back up, they would go long, put their stop under that level, and then sell into strength. That's what smart traders did. So now we're looking to see if there's sellers here at 24. So if you went long here at 18, why wouldn't you sell a few at 22, 23? And you know what? You can put an offer at 25 3/4 and see if anybody buys it. But if nobody buys it at 25, 26, sell it at 24. Because you're long at 18, 19. It's so simple. But everybody hates simplicity because people want to be sold shit, right? They want to be sold software that costs $1,000 a month. They want to be sold bookmap and noseprint and all this crap that you don't need, right? So now the people who shorted here, this is what's going on. The people who shorted here, averaged up here, now they're all going to cover, and all of the inventory, all the goodies are underneath 22. So the people who are long 22 is, let's see how much we can get these bastards to pay. Can we get them to pay 26, 27, 28, 30? Right? That's all it is. And the algos make it so accurate, right? The accuracy is crazy. So you just go and you put a straight line when the candles go down like this. The top of the candles are where the sellers initiate. So when you're long, you can manage your expectations. Nice work, Rishi. 18, 3.5 points. No pain, right? Beautiful. 3.5 points, and a lot of people are like, JJ, 3.5 points isn't a lot. But, you know, you do 3.5 points, you start out on the micro and you learn what to do, right? So then you go to the mini, and $175 a contract, you do 5 E-minis for 3.5 points. That's $875. You do that trade once a day, that's a $17,500 month, right? That's the goal. Who doesn't want an extra 15, 17, 20 grand a month? Simplicity is key. And you know why simplicity is key, Dano? Because when you actually get punched in the face, you'll know how to respond. Because a lot of times things don't go well in trading. So we train ourselves how to get out of bad situations. So had we gone long here, right? You know, if we were long here between, maybe we were long 13, 14, and we made a sale at 16, 17, and we had some sell orders here, and they did not get executed, well, we can still hit flatten and still take that profit instead of letting it come all the way back down, right? That's assuming a 100% win rate. You're right, Pepper Spice, but I'm just trying to show you the simplicity of the trade. Nobody has a 100% win rate, and I'm not saying that you're going to. But I'm saying you sure as crap are going to make a lot more money trading this way than with some complicated indicator-based trading, which you're blowing up your accounts. Do you understand what I'm trying to say? I'm not saying you have a 100% win rate, but when you do take losses, your losses, right? If you're long 12, 13, and your out is 11 and 3/4, 11 and a half, if that doesn't work out, guess what? You're not blowing up your account like all these other fools who are blowing up their accounts day in and day out by trying to follow some stupidly overcomplicated trading method which has no basis in business reality. Right? You guys have absolutely zero clue about how the business works. I'm giving you how the business works and how to do it in a simple manner, right? And sure, I'm oversimplifying things just because people need stuff to be oversimplified because they have a 30-second attention span, right? So if I can capture your attention and say, hey, wouldn't you like to make 15 grand a month without blowing up your account? Then it might actually get people's attention. Because if you try and speak rationally to people, they don't go for it. They want to be sold, right? People want to be sold. You want some shiny thing, right? So if you want to learn how to do this, right, in an uncomplicated manner, where you actually have a hope in hell of making money, We have a 3-day trial at the trading syndicate. Come in there, check it out for 3 days, learn the little bit about the business so you're not stumbling around, changing everything. So what is the big thing? Here's the thing. Retail traders, first of all, they don't know what the hell they're doing. Second of all, they're listening to people who don't know what the hell they're doing. Thirdly, they're using overcomplicated things that have no basis in business reality. Number four, they don't know when to trade. So they're doing business at all the wrong times, right? So what we do is we cure you of that by giving you a simple method in which to read a market, look at a market, execute a market, and manage your risk so you can do proper business. Does that make sense? Right? I use this example because look, my traders make money. The people who I mentor, they make money. They don't blow up accounts, right? I have one guy who does 4 to 5 grand a day consistently. Consistently, he makes $4,000 to $5,000 a day. Some days he does 20 to 30 grand a day. You know what kind of losses he has when he has a bad day? On a $3 million account, his biggest losses are like $1,500. So he came to me, he had money, he was trading, and I taught him how to make $1 million last year without having big drawdowns. Right? I can show you his P&Ls, right? And that's in my mentoring program. So instead of having a $20,000 drawdown, he stops trading when he's down like a $1,500, a grand. He stops, reassesses things, and if he's trading poorly, he'll stop trading for that day. So he doesn't get caught up in the endless loop that you guys do because he understands, oh, I'm not doing business well. I'm not executing properly. So I'll stop trading and reassess. Right? So what I do is I take people who have no clue and I teach them how to have a clue so they can do business, pay their bills, right? Even if you made $100 a day, you're better off than 99% of these people who are looking to make 30, 40, 50 grand a day and have no hope in hell of doing it because it's completely delusional, right? It's a skill-based business and you have to develop the skill. If you don't develop the skill, you're going to be shit out of luck, very simply, right? Right. This is the year. I'm old now. I'm 58 years old, so there's no reason for me to bullshit you guys. I've made my money, right? We only charge $19 a month. So if you really want to learn how to do this, if you want to learn how to make money, if you're tired of blowing up accounts, if you're tired of getting sick from the stress and the frustration that this business gives people because it's full of misinformation and people who don't know what they're doing, who are scamming you, come into the trading syndicate and you'll learn how to do proper business, right? There you go, Rishi. Well done, right? That's pretty much it for me, folks. A little bit of reality on a Monday morning, right? So when you do take losses, the trick is not to blow up your account. How do you do that? So say you made $500 today, right? As soon as you're down 10%, you stop trading. Right? And people were like, JJ, that's difficult. I can't do that, right? I'm like, listen, no. You have to do that. You're an adult, right? Right? So if you're an adult and you're capable of making decisions, act like an adult and make good business decisions. Right? So if I'm up $1,000 and I lose 100, I stop trading. Why? Because in business, as soon as you start losing money, you have the ability in this business to pull out and stop doing business and preserve your money. Make sense? Right? So I'm just being real with you folks because I don't, this is the year that I don't BS people and I just tell them, look, you know, it's like in Terminator. You want to live? Come with me. I'll teach you how to make money. Right? I've been in this business now for 34 years. I'm vwaptrader1 on X. This is the Trading Syndicate. Thank you all for being with us. Have a wonderful, wonderful morning. Make sure all your trades are based on reality, business reality, okay? If you don't know what that is, reach out. If you're having trouble, DM me. New contract is almost there. We're at 104,000. The old one's 128. I'm sure the new one will surpass the old one by RTH. So that's why we're trading the June contract. Spring is here. Have a wonderful, wonderful morning, everyone. If you have trouble, reach out. I am around. Thank you so much. And we will see you at 9 o'clock for RTH. Thanks, everyone. Bye for now.